Hello guys, good morning. Today is September 9th, right? No, 6th. September 6th. I'm gonna be talking about today's price action, and this is going to be a quick and short video, trying to explain what happened today, what we could have taken advantage of, and pretty much that's it. And today, so far, we've had a pretty aggressive bearish price action, right? Pretty aggressive since London. London just went higher, took buy side, and then started to drop lower. Sweep on buy side, aggression lower, respects that, aggression lower, order block mitigated there, fair value gap mitigated there. We have an entry here that we'll talk about. Oh, actually, this is the entry that we'll talk about in a minute. And prices went lower, right? Did we have confluences to go lower? Yes. Did we have confluences to go higher? Yes. In my opinion, all of the sell side liquidity that was taken already by phase one was a potential good indication to try and buy. Also, the fact that we had taken so much sell side liquidity from this point, that's why I was expecting this low to hold. But so far, all that it has really been is impulse, correction, impulse, swivel liquidity, changing direction, and now going lower. Potentially, this was just a retracement to now continue lower, or I guess we'll see what happens in the rest of the week, right? So the only opportunity that we could have taken advantage of today is this one. What do I look for in a trade? First of all, clear direction. In my opinion, we didn't have that today, but as an example, what did phase one do as soon as it began? This is the open of phase one. Starts going aggressively higher, so this is manipulation on the power of 3. This is market retraction and everything. Sweeps buy side liquidity and then immediately starts going lower, creating a 50-minute fair value gap. What was the problem with this that I just really couldn't do much with this? So the 50-minute fair value gap is mitigated here. Keep in mind that the open on session is on this candle right here. This is session open. Put it on the left. And this is white kills open. So price opens here. So this is the time when we actually start trading, right? And at that point, the 50-minute fair value gap was mitigated here, cost and aggression lower, took sell side liquidity, and I'm getting cold so many times a day for some reason. Okay, so took sell side liquidity, market shifted, and due to the fact that due to yesterday's price action, the low that was taken, and everything that we had in our favor, in my opinion, today, I was expecting price to be bullish, right? That was my bias for today. Did we have confluences to sell? Again, phase one was a pretty good confluence. The price took buy side liquidity, dropped lower aggressively, and created this 50-minute fair value gap. Now, my issue with this 50-minute fair value gap is that this trade here would have failed, right? This would have been already the first mitigation. Then we have this, which, to be honest, it does take a lot of buy side liquidity, but if you look deep into this, the only fair value gap that we actually get clean is this one. So it's literally nothing that I could have traded it. Now, why would have the open allowed us to take this opportunity? First of all, the open opens right here, and it goes a bit lower, a bit higher, but basically goes against the trend. What does it do when it goes against the trend? It takes a lot of buy side liquidity, of course, just visible on the 1 minute time frame, but definitely buy side liquidity. Takes all of that buy side liquidity, still respecting everything that happened here to the left. We have still the 50-minute fair value gap, and I thought that was mitigated. Doesn't matter. So we had the 50-minute fair value gap still within that price action. This was just a run of buy side liquidity. We also had this buy side liquidity being taken here on this tiny bit of a range. A little bit of a move lower, just creates more liquidity. Session opens, trades higher, takes buy side liquidity, displacement lower, market shift with displacement as well, as mentioned. And that would have been the entry, right? That would have been the fair value gap that we would have taken to take this entry. And that's pretty much it. What would have we targeted? Well, target would have been definitely complicated because because of multiple reasons. I don't think I would have gone for previous day's low, right? So maybe 5R would have been a nice target. And that's pretty much it. So what do I look for in a trade? Let's put it like this. 20. First, run and stops. Second, displacement on end market shift on, let's put it like this, 5-10 minute. 3 will be lower time frames trade into fair value gaps, higher time from fair value gaps. And that'll be the point where we go down to the lower time frames. So A, let's put it like this, A will be mitigation of 5-minute, 15-minute fair value gap. B, displacement and market shift 1, 2, 3, 4 minute time frames. And C, execution on lower time frame fair value gap. That's what I look for. So did we have that here? We have the run and stops, creation of 5-minute fair value gap, displacement, and market shift. In my opinion, I don't think we actually needed a market shift here. This is just a break of structure, so price just continuing lower simply. So it takes that, creates the fair value gap. So that's the displacement and market shift. The displacement is what generates the fair value gaps. Then the lower time frames mitigate that fair value gap. This would have been a failed entry if we wanted to look at it like that. Price goes higher. We have tiny run of buy side liquidity, right? Goes lower, higher, more buy side liquidity being taken. Displacement in the 1 minute, in this case, lower time frame with market shift as well. This is the market shift as we discussed, and the execution on the lower time frame. Did we get everything that we look for? Yes, it was a little bit messy because, as an example, if the liquidity, do I have a big pen? I don't think I do. Says that I do, but I'm pretty sure I don't. Yeah, no, I don't. What happens if I did this? Can I do believe it records it, but I'm not gonna risk it. So what I would have liked to is, let's use, okay. This is the reaction that actually takes the liquidity. So as an example, if that high would have not actually taken the liquidity, so sorry, from this liquidity, I mean, if that high would have not taken the liquidity and would have actually just formed more and would have not caused much of an impulse, and then this would have gone higher, and in here we see the displacement, the market shift, and the fair value gap around here to sell down to, well, again, target would have been a bit difficult today, right? So avoiding everything that happens here, because this causes a move lower, but doesn't create a fair value gap for us to trade from, right? It does create liquidity that price trades into, but at that point, it's just so much new structure that this starts to be, or to feel more than be, but to feel a little bit more insignificant, in my opinion, right? So definitely would have been complicated to take this opportunity, but we do have everything that we look for on that one. So it is what it is, right? I completely missed out on this one, right? Completely missed out on this one. I saw the displacement, but didn't think much of it because it was happening within a range. If we look at the 5-minute, we really didn't have anything on this except for this very tiny fair value gap, right? But again, it just didn't make sense to me. Kind of missed out on the run of buy side liquidity, which could have been a little bit of an indication, but again, nothing that I could have really done with that. Then we got something pretty similar to what we had on Thursday. We had a high in the 5-minute, price takes that high. I actually sent an audio to voice message to the Telegram where I said that's what I wanted to be selling, right? A high being created, the high being taken as liquidity, 5-minute displacement, and that's where I will try to sell. But clearly that didn't happen because it happened along with the news. It takes a high, there's no displacement in the 5 minutes to sell from, and price just goes aggressively lower to the to previous day's lows, low. This is a fair value gap that we could have taken just like that, but there's no market shift really with this fair value gap, so there's nothing that I can do. Could have tried to sell from here where there's finally a fair value gap with the market shift as well. But yeah, it would have not triggered me. Now, market shift here after taking previous day's low, so we could see price changing directions, but in my opinion, this might be a little bit more of a Judah swing, taking some buy side, continuing lower, right? Yeah, that's pretty much it. Just wanted to do this tiny bit of a resume. Don't want to get into much details because, again, price action was pretty bearish. Could have taken advantage of this. We did have some confluences. Just nothing that I really like to take, and it is what it is. So that's pretty much it. Hope you enjoyed, and I'll see you on to the next one.